friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I got two of my good friends with me, and Jeff decided to just swing by and crash our party. But you guys all know Anton. If you watch this on any regular basis, he's our resident local real estate expert, developer, extraordinaire, but so is Mr. Jeff Latham. So we get a double dose of real estate talk today. And look, I've been wanting to plan this episode here for a few weeks because here we are getting into February, second month of 2025. And I just thought it'd be good to check in and see, you know, what's going on in the real estate industry. What are the things that you guys are looking at? Anton, in our previous conversations, we like to talk about investing, but also, you know, just what's going on in the market for the average consumer. So I think, you know, if I could, let's just start a little bit with kind of the sense of things in the market right now. I mean, I know last year around this time we talked, and you know, this is the time of year where we don't yet see inventory coming on, but I do feel like just anecdotally I see more for sale signs out there. So what's going on with inventory? What's kind of the general feeling out there?
So generally speaking, when we're looking at years like right after an election, it doesn't matter if it's Republican, Democrat, pink fluffy unicorn, it's the fact that the election is actually done. So it provides certainty for the future. Because that certainty has happened and that there appears to be a pro-business sentiment, and you know, Trump won the popular vote, so the a majority of people feel supported right now. The market is actually busier than I thought starting this year. So yes, more listings did come on the market, but we sold more homes. Now I'm talking the whole Seattle metro. More homes went pending. Average price went up. So average price went up between 5 to almost 6% already when you compare January versus January. And pending transactions are up between 10 to 16%. So you're starting off with a bang. The other thing that we've been seeing, and Jeff, I'd love your opinion on this, is we've been seeing that lower price range bidding wars. Upper, like I'm talking really expensive, like double the median, double the average. Same thing. Tons of activity with like kind of the upper middle, not as hot. And what I think is happening there is that's where there's not as much competition, because the people who would be that traditional move-up buyer where they're going to sell their home, they can't quite afford to go into the next property. So once again, kind of the luxury top end on fire, the median price and below really on fire. I mean, we just had a bidding war on Camano Island. No offense to Camano Island, beautiful area. You don't usually have bidding wars on Camano Island. And conversely, we had a bidding war in Bellevue. The bidding war in Bellevue, that property was shown over 90 times. It went almost $200,000 over list price, all cash, all waived, and it got 11 offers. So, it's kind of a dichotomy and crazy, but what are you seeing buyer side, seller side with your listings or your guys' activity?
Yeah, we've had listings that were sitting for a while, and now we're starting to see offers, showings, phones starting to ring a lot more leads are coming in. Things are picking up, and the market always it follows the seasonality of the year, right? So everything kind of goes into hibernation during the winter, whether it's flowers, animals, whatever it may be. And then come springtime, right after the Super Bowl, which was 2 days ago, it always kicks up. And the bidding wars start because there's still a lack of inventory. Everybody comes out of hibernation, and lack of supply causes an increase in demand, and the prices go up. And if you're a buyer, you better buy yesterday or right now.
Yeah. So we're seeing kind of that normal pattern play out, it feels like.
That normal pattern, I'd say the normal pattern has more spice on top of it.
Yeah.
So
spice. We like spice.
So, Ben and I were talking about this, my partner, Ben Kenny, we're talking about this in December. And kind of our personal projections for this year was we believed the Metro would sell probably about 10% more. And we're already seeing that play out. So one thing for loan officers to be thinking about, one thing for real estate brokers to be thinking about is like, if you did 30 deals last year, you should do 33 this year by just simply doing the same activities as that market rises. In other words, this is that rising tide is going to lift all ships. So the average person should get anywhere between 1 to 10 more transactions this year, just because there's going to be a little bit more volume, even though rates are higher. This is anecdotal evidence, but in our team meeting earlier today, we asked, we kind of did a poll. Hey, whose cell phones are ringing more? Who's getting more DMs? Who's having more conversations? Everyone's like, a lot more. And I said, are there people who wanted to buy or were thinking about selling previously who are now all of a sudden coming out of the woodwork and saying, I want to do it? Yes. So I think there was a bit of pent-up demand that now they're just like, you know what? It's close enough. I don't care if rates are 7. I've got to get something done because I've been delaying this for the last 24 months.
Right. Yeah, I wonder, obviously, as mortgage professionals, we talk about interest rates with people all the time. As real estate agents, what do you hear? Do you, it sounds like it's maybe not, people are getting used to it, let's say, but how much objection do people have to where interest rates are right now? And is that, still keeping them from buying? Is it, how big of a factor do you think that is? What would change if rates drop by a point, do you think?
Oh, the market would go crazy. We're still seeing, pent-up demand because of all these people that have 3% interest rates. They don't want to trade up for 7%.
Yeah. Right.
And so that's still holding the values up and keeping the inventory tight. But a lot of people, they understand they're going to get priced out of the market. And you just can't wait forever. So rates will eventually adjust and they can refinance later.
Yeah, yeah. I mean, I'm still bullish on rates. It's very difficult to predict what's going to happen with interest rates. I think that for those people that are watching what it is, and I talked about this in a previous podcast, the Trump administration can do to directly impact rates. I'll tell you what he can't do, even though he might think that he can, is convince Jerome Powell to cut rates more than he wants to. But here's the good news. If you've noticed in his most recent conversations and press conferences around when he does speak about mortgage rates, he's shifted now talking about the 10-year.
Bingo.
And so that's a good shift, because that, I think that he does have a little bit more control over. I'm not going to go too deep into those ways, but there's things that he could do. There's things the Treasury could do that could impact the 10-year. It's the right focus, and mortgage rates will come down if the 10-year comes down, and it has. So if you look at the 10-year over the last 3 weeks, 4 weeks, I mean, we're seeing
like it peaked.
It looks like it peaked, and it. I think I predicted it wouldn't go over 450. It went up to like 480, but we're back under 450 again. And so I'm feeling good about that. That's what I think we all need to keep an eye on. I'm still very bullish on and becoming more bullish. I mean, I had no idea what Doge was going to do, and I don't mean Doge as far as specifically, but just this idea of shrinking the size of government and government spending. And it appears, based on the last couple of weeks, that that's going to be significant. Yeah. And you couple that with, I think, the real strong initiatives around, trying to bring down the price of oil and gas. Yeah. And as I've spoken on here a couple times about the correlation between oil prices and mortgage interest rates and just inflation in general, I start becoming a little more bullish again that we could see, quite a bit lower rates. Now, I'm not talking 3s and 4s, but I'm talking like, high 5s, maybe even mid 5s if we're lucky. And I think, to your point, Jeff, like that's just going to light things on fire. If we get anything with a 5 handle, I think it's, Katie bar the door.
Yeah. What you're seeing is the buyer has the want to, they may not have the financial means. So the demand is there as the debt gets cheaper. And, specifically because we do a lot in Snohomish County, we've always represented a lot of first-time home buyers, always a lot of investors. And so, when a person's looking at a $600,000 property and all of a sudden they've got a $5,000 a month mortgage, that's a lot to choke down for a first-time home buyer, just the sheer amount of income they have to qualify for. Conversely, it's kind of funny when you're having these conversations where one of our friends is considering selling a property. It would sell for, about 1.2. They only owe, like $350 on it. So they'd net a huge amount. For them to move up the property ladder, though, because the rate would go from 3 to 7, so in the property they're looking at, it's about 2, their payment more than doubles.
Right.
And so it's not fully palatable yet. And so as rates come down, one, it becomes more palatable. Two, what I think you're seeing with Mr. Trump and with the Treasury Secretary is they're directing their attention at the 10-year, and there's some games they can play. But the reason they have to direct their attention at the 10-year is I believe the bond market was sharing signals that the world is pissed off at us having too much debt and spending like drunken sailors.
Right.
And so as Doge has shined the light and said, well, this spending's out of control, as it's become a little more in vogue in government to control the spending, I think that you're seeing the 10-year also get faith in what's happening, because you also didn't see, as the 10-year rose and broke the 450, you didn't see the spreads expand again. And, you know, the regular mortgage spreads.
Right.
They stayed about the same. So as confidence continues, I think that you're 1,000% correct, Tony. I think that 10 is going to continue to trend in a downward direction, and you'll see low sixes, upper fives towards the end of the year. The problem, though, in the Seattle Metro is if we're already showing approximately 5% appreciation in freaking January, if rates come down, you might see like 10% appreciation this year.
Right. Yeah, hence the, you know, we do a thing called the cost of waiting analysis, right? There is a cost of waiting in this market that if you wait to get the rate that you want, and you said it earlier, Jeff, it's like, you know, they probably need to pull the trigger now and restructure their mortgage when the time is right to do so, because there's a significant cost to waiting, and there's nothing that I see that tells me appreciation isn't going to continue.
So the Seattle Metro in 2024, depending on which cities you look in and where you look. So I'm just kind of smashing it all together. The low end was 5.5 and the top end was 9.6. Let's just call it 7 on average. So with 7% interest rates, you appreciated over 7%. If rates continue down, would you expect, if you were a betting man or a betting woman, that you would get 7% or more in 2025? It's an easy bet.
Right.
Because there's also less inventory.
All right, well, let's pivot. Let's talk about investment opportunities. Both of you guys are investors. I love to invest in real estate, support investors in real estate. So, you know, let's just kind of go through the list. You know, a lot of talk last year. We talked about, you know, the zoning changes that have been happening, you know, the creation of DADUs and multiple, you know, units on people's property. Still seeing a lot of that happening. Is that taken off like we thought? Like, what's going on in that market?
It's extremely taken off to the point where I think a lot of first-time home buyers, so we're recording this in Everett, Washington. In Everett, Washington specifically, as the smaller properties come on the market, they're getting bid up and they're being purchased by investors. So on this podcast and on my podcast and on everything we've been talking about for the last year, we told you this was coming. Right. We said the first-time home buyer is going to get bid out by investors, and then these DADUs are going to cause properties to rise between 25 to 100 grand. And I think you've already seen about 40, 50 grand increase here in Everett. And then one of them right over there, 1,000 square foot backyard home, sold, pending right now, $599.
So just to clarify, they built a detached ADU in the backyard.
Yes.
It's 1,000 square feet.
1,000 square feet.
And it sold for?
It's pending $599. He sold the one next to it off market, $575 to one of the neighbors. $599 pending on the market. So you've got comps that are showing that little dadu is worth 600 grand. All in for us to build that thing, even if you got to pay a builder to build it, you're like 315, 350.
Right. And you didn't really need to short plat or do anything with the lot because you bought the lot and you could just build it.
Go get a building permit and then slap a condo over the top of it.
All right, so that's hot. What about fixes and flips? You guys both have been in that world. I mean, are you seeing a lot of opportunities for fix and flips? Do you have investors still looking for those? Is that still happening?
Yeah, we're buying a lot of houses, everything we can. So there's a lot of people that have homes that need work, and instead of listing it, they would just rather have us come in and buy it. and not have to mess with it, have strangers walking through, have showings, inspections, and all that stuff. And I found that certainty is a currency that's sometimes more powerful than the mighty dollar, just knowing it's handled. It's like having a vehicle that you just want to get rid of that needs a bunch of work. You just like wish someone would take it. Well, I found that in the real estate with some houses, and it surprised me. I say, look, I could sell your home here, or I could buy it here. And I said, just let me sell it here to make you more money. And they're like, no, I just want you to buy it, take it off my hands. And it shocked me when I found this out. And I love it because it's a win-win.
Well, yeah, I mean, and Jeff, you've kind of built a business model to some degree around that, right? I mean, I've seen you advertise that that's an option.
Well, one of his million ads that he's running that he's boosted
yes.
to.
Yes. Hey, he's leveraging the power of social media sponsored ads. Hey, nothing wrong with that. But just to riff on this for a second. I mean, so you've really kind of made that a business model, which is, hey, look, I want to help you sell and get the top dollar for your home, but not every, I mean, you kind of are targeting people who might be in a situation where I could kind of go either way. And these are houses that many times they wouldn't get top dollar in their current state, and they may not have the funds to put into them. So maybe just talk a little bit about, I mean, that strategy. Who is the perfect person for that? Or are you targeting a certain type of a buyer, or it's just, these end up coming to you because you're willing to do things that other real estate agents aren't willing to do with those properties?
Yeah, we just think outside the box, right? Because most sellers, they're stuck, they're paralyzed. Yeah. And it's because their house needs carpet, paint, landscaping, a new roof, or they just don't know where to start. And so some people, we just come in, look at their house, and we give them options. We're like, look, we can front load these costs, these repairs, and you can pay us back at closing, and we can sell it for here. And then if the market's severely inventory deficient, we just list the damn thing because there's nothing to buy and people will pay for it.
Right.
Or we just buy it from them, and this solves one of their problems. It's how do I buy a home? How do I sell my home, buy a home, and not be homeless? And so we'll buy people's homes and allow them to stay in it as long as they want. We'll kind of work out the details until they find their next home so they know that's handled. So it gets over the real estate catch-22 where they don't have to sell 2 homes to move. They just got to sell and buy. They just got to go buy one because it's like a cash offer. Their home's already purchased.
Yeah. And what percentage of your real estate business do you think it ends up going one of those routes? That I would say would be more of a non-traditional type of a transaction.
Well, all of my appointments are from that marketing because I just hit all different areas. I'm like, I could list your home as is, I could fix up your home and sell it, or I could just buy it.
So all of your leads are mostly reaching out to you because either you helped someone else with this and they referred you, or they saw your ads and they know that those are the kind of options that you would take them through. And it sounds like maybe some agents aren't even having that conversation with them.
Most are not
having that conversation with them.
I advertise aggressively.
He advertises aggressively.
Well, I don't put out content like you guys, so I just pay for it.
Right. Hey, whatever gets it out there, right? Whatever gets it out there. I see it all the time. It's effective. It's effective. What about you, Anton? Are you doing? I mean, I know that you come from the mindset of an investor as well.
Yeah.
But I don't think you've maybe
we're not doing as many flips as we used to because the margins aren't there. We are selling flips to other investors and to our homies, and I joke and I call it my homies, but really what it is we go put 10 things under contract. 1 I give to my homies, the next 2 I assign to someone else, and then 3 or 4 of them I figure something out. 2 of them we're going to build all the way through, and then 1 I'm going to keep.
So a lot of that's like wholesaling.
Wholesaling is a good term for it.
Wholetailing.
But it's more of like wholetailing or getting we always solve a lot of traditional wholesalers don't know what they're doing, so I don't even like to call it wholesaling.
It's a good point, yeah. They're not professional real estate agents like you guys are.
We package it up and solve the problem. So, like one we were talking about earlier, we're getting the eviction done. We're figuring out the surveying. We're figuring out the drain field. So this could be fully packaged and ready to go for another investor. A traditional wholesaler, they haven't sold a shit ton of real estate. They just throw it out there and go, I hope it works.
How much is a shit ton?
A shit ton? A shit ton starts at thousands. So when you can say you've sold thousands of homes, that's an official shit ton.
Okay, perfect. Thanks for clarifying.
Yeah. And But we are flipping, the things that we're building for dadoos or additional units and things like that on it. And what we see the most demand for is new construction. I think you're going to continue to get a premium in the ADU dadu space, in the middle housing, and I think that's your biggest and best opportunity that I just recommend everyone get involved in.
Yeah. All right. Couple other questions. What's been the impact to you guys, in your opinion, of the NAR settlement, the lawsuit? I think in Washington it was a little bit muted because of the way that we did our purchase agreements and stuff already, where the buyer's agent commission was disclosed and so on and so forth. But I'm just curious, your take, on, has that been a big factor? Have you seen buyer's agents or people that don't have the network to get listings getting out of the market still? I mean, we're still losing agents. What's your general take on what's going on there?
It hasn't affected us at all. I think, the MLS did a good job curbing that ahead of time, right? So as far as agents getting out of the market, the last 2 years have been brutal. And I think that's done a pretty good cleansing of. But
you don't think it's directly as an impact of the changes from the NAR level?
No, it's an impact from the lack of sales.
Yeah, just the market,
what are we selling as many homes back as early 90s? Tell us, Rain Man.
Yeah, I know. Nationally, you're at 1995. Locally, you're at 2012. Yeah, so at the end of the great financial crisis, we're selling the same homes as we just did in 2024.
Right, yeah, brutal. I remember 2012. It wasn't fun.
Yeah, brutal. To echo what Jeff's saying, personal business, zero effect. Matter of fact, it's actually allowed us to charge more in certain circumstances, because when you've done thousands of transactions, there's a differentiator of service that the buyer was never asking before. So to be honest, on a personal level, I love it. Now, let me slap on my broker owner hat. So when I'm looking at the brokerages as a whole and just all the brokerages in the local area, they are still losing agents. Commissions are pretty much the same. Parts of the east side, we're talking Bellevue, Kirkland.
Higher end market.
That commission has squished a little bit. I think everywhere else, though, nothing's changed, but there are real estate agents still leaving the industry. One thing I want to point out for mortgage professionals, I want to point this out for real estate professionals. I was asked a powerful question by a young man a few weeks ago. He said, when was the best time in your career to sell real estate? And it caught me thinking, and I go, oh man, that was 2012, 13, 14, 15, 16. And he said, why? I said, well, as you came out of the recession, there was less agents doing the business, but that natural wave of ride up of the business happened. We are in that exact same spot today. And so we talked earlier about that rise in transactions. That natural rise in transactions will naturally lift your business. We are probably going through the next best time since the great financial crisis.
But let's be honest. So I knew both of you guys back during those times, and you both, transition your business to deal with foreclosures, REOs, all the bank stuff. I mean, look, you went where the business was and built teams to capture the capacity and deal with that and scale and put up billboards and did all your stuff, right? So you evolved to capitalize on that market.
Yes.
A ton of people were in the market in 2012 and would tell you it was horrible for them. Same thing we talk about here. You guys are talking about, meeting with borrowers, finding them where they're at, coming up with creative solutions for them, coming up with, you were just telling me, having to help somebody deal with the foreclosure of their property so that they have some, whatever their issue is, you're coming out and saying, I'm going to take a holistic view to solving your real estate issues. So you've modified your business to adapt to the current situations, and then finding that, wow, there's like a gold vein here of opportunity. So I think that that's important to point out, whether it be back then or now. yes, there's massive opportunity. And Anton, we tend to always talk about this on our podcast, which is where's the opportunity at today? Let's go to it. You guys are pros at that. I don't know that the average real estate agent understands, or loan officer, because same things happen in lending, right? If you want to be super busy right now, you better understand every non-QM product under the sun. You better understand all the first-time home buyer grant programs, all the stuff that's available, because that's what people need right now. And you could be super busy if you're doing the right kind of loans. If you're just doing FHA, VA, conventional loans right now, like you're going, man, this time sucks. It's like, well, you got to go find the opportunity. So that's a huge point here, is that you guys have been uber successful because what I've seen is you've adapted to the market as where the opportunities exist at that time.
And so prior to real estate, I worked in biotech. And so like, I'm a nerd. It's okay. I love it. I embrace it. But what you learn when you're just looking at tech in general is that whole world's going to change every 6 months. So that was my first job. And so when I came into real estate, I just assumed it was the same way. I just assumed everything was going to change every 6 months. So every time there's a pattern shift, a change, we just move. And what we've learned over time, and Jeff is masterful at marketing this. He's marketing, I'm messaging. And it's the same thing. I just put out a bunch of content, he does the same thing and then pays. But what both of us are doing is we're showing up with a menu of services.
Right.
And solutions.
Right.
Bingo. And solutions. And then the skill I would recommend people develop is learn the power of asking amazing questions and going 3 levels deep on every question, because then I can understand how to best help and serve them. I think a lot of loan officers, a lot of real estate professionals don't ask enough questions, so they don't have a depth to serve the client at the level they want to be served. Because, Tony, to give you an example, a lot of sellers or buyers and investors, they don't even know exactly what they want. You have to ask them enough questions to help them figure out these are possibilities. To go back to one thing we were just saying before, was Jeff was talking about, hey, I'll buy your home. And if I buy your home, I'm going to buy it for a discount, but I could list it for this. Well, we created an opportunity in Bothell where we know we're getting money off the price. The seller knows we're getting money off the price, but he's got a property in Eastern Washington near the Columbia River where he wants to build his home. So he wants the convenience of a known quantity to make that happen. And we've created such a good relationship there that his grandson called me and showed me another family member's home and said, hey, would you come look at this and walk us through the options? And I said, absolutely, I'll come look at it. And we're going to tell you how much to repair it, what you could do with it, and go through the 20 options that you have available to you. And they said, well, would you make an offer on it? I said, I don't know if I'm the right buyer. Let's go through the options first. And yes, I may be one of those options, but let's not just immediately assume that we've got to go there.
Right. And I think that's important, right? Because you definitely have a fiduciary responsibility, let's say,
100%.
to make sure that we vet out what's the best opportunity for them. One of which maybe, you be an investor, or one of your homies, as you said, might be the investor. Anything to add to that, Jeff?
Well, I think adversity is the greatest teacher, and it makes us stronger, quicker, faster, and better. And so there's a gift. 2008, 2009, when the lights got shut out, it caused me to adapt and shift and become a marketer. And where there's opportunity, I think in any business, you're a marketer first, and a leader and a closer, and not a savior. If you have teams, you're not carrying them.
Yeah.
But the business is marketing. The reward is servicing and helping the client. Because if no one knows who you are, then how are you going to get business, right? And so you guys market with content, and I market with dollars and money and content, right? To just blast it out there, because the volume you guys put out is crazy, and I just have a different way. One other thing.
Can I clarify what you're saying? So you're saying that the business is you got to make the phone ring, and that's the primary.
You're a
focus
marketer.
first. You're
Every
a marketer.
business is marketing. If you don't market, you're swimming upstream. People have to know who you are. You can't just be a secret agent. How are you going to sell houses, right?
Not very well.
So marketing is my business. Helping people with their real estate challenges is my reward. And one other thing that I don't think enough people touch on is actually giving a shit about your clients.
Yeah, amen.
You have to care about them. And the hack to this matrix, this highly pixelated simulation that we live in, is love. And when you meet people, when I go and meet people, whether they're rednecks or yuppies or blue collar people, I love them all. And I can just feel their soul. And I don't have to sell them anything because I'm just there truly to help. And I'm like, what is the challenge? What do you want? How much money do you want in your pocket? What are your goals? When do you want to be out of your house? What are your problems? How can I help you? And they tell me, bop, 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 bop. And I say, okay, if I do this, this, and this, do you want to work with me? And they're like, yeah. So I'll make it happen. But it's caring about people. If you care, they can just feel it internally.
Yeah.
And I think in our business, we're taught how to have scripts and get one over on people and neurolinguistic programming and all this dialogue. And really, if you just give a shit about people, they're going to trust you and like you and love you and work with you and refer you everyone because you took care of their grandpa.
Yeah. What Jeff just showed was the power of asking amazing questions. Your goal for 2025 is to get like amazing at asking powerful questions and using the follow-up. And Jeff uses love. I call it care and candor. I care about you and I want to be candid about the situation. I am empathetic, but I'm not sympathetic to what's happening. And then I'm just a little more gruff than he is. So this is why it works this way. Because part of that like care and candor is I care, but this is where we're at. This is the result. This is the numbers want to play. So
Right.
I'm just going to be a little bit more boom, boom, boom. And what also is kind of funny, Jeff is using marketing. We use sales first. So we use literally hardcore direct sales, cold calling, door knocking, text messaging, things like that. That's our first level of assault. And then content and actual ads, second and third. So it's just different ways to do the exact same thing.
Well, but something's got to be done, right? If you're not
Bingo.
going to be a marketer and you're not going to do
Yes.
the marketing, then you better be willing to do the cold calling and the scripting and the hard stuff. At the end of the day, if there's nobody to help,
Yes.
it doesn't matter how much you care.
Yeah.
There's no one to help.
Yeah. You have to create those at bats to create the opportunities.
100%. All right, last question I want to ask you guys is, I know that over the last few years, it felt to me like there was a big shift in real estate and in mortgage towards large teams. And, teams that have like a large team and then they got like a couple buyer's agents and they got listing agents and it felt like for a while, like the individual agent was just kind of going to be, gone, really. If you weren't part of a team, you weren't selling real estate. I'm curious, with the slowdown in the overall market, does that make the economics of a team less viable, or is it now even more viable, or what's happening to the team environment, just in your opinion? And obviously you guys both have teams, but you also, own real estate companies. Yeah. So what are you seeing out there? I'm curious.
Yeah, so there's a book called the MREA, and it's a great book, yet it's a roadmap and it's challenging. And teams are great, but what comes with that is a lot of complexity, a lot of personalities, and a lot of moving parts. And so if I could redo it all over again, I would have probably a smaller team, but where I am highly leveraged because I just want to play as much as possible, is I have very good assistants, and transaction coordinators. And so I still produce quite a bit, and then my team does as well. But we were at one time, we had like 35 people, and we scaled back, and my life's much more peaceful now.
Yeah.
Is that, you see that universally? I mean,
No, I think you actually see the opposite, but I want to hit on one thing that Jeff was just saying. One, teams are eating the world, and there won't be single agents. Period. End of discussion.
Oh, so do you agree with that statement?
I 1000% agree. Here's why. As the price of homes has continued to increase, especially here in the Seattle metro, but it's 20,000 throughout the U.S. But as our homes have gotten really expensive, the level of service demanded by the buyer, the seller, and the investor has also just gone through the roof. While at the same time, the level of litigation has gone through the roof. So the economics of a team may not make as much sense when times aren't as good. But they don't also make as much sense for the team owner. So the team owner gets massively pinched too, because their margins get cut into, just like any business. So the brokerage margin gets hit, the team's margin gets hit, but teams recruit more because they create an environment of stability,
Sure,
accountability, consistency, and that's one of the things that agents and loan officers they fight. So I think it's going to continue to get bigger. And I think you're going to continue to see the industry shrink. For conversation's sake, don't shoot me, my fellow real estate people. I think we could be a third of the total size and still do the same amount of transactions. In other words, I'm talking 500,000 to 600,000 agents across the whole United States.
And what is it right now?
1.6. You know, the 1.6 in NAR plus, you know, maybe another 200,000. So let's call it 1.8. So I'm saying it drops down to a third of that. And you would still sell the same amount of homes, but you're going to, each individual will start to sell more. You can see it happening all across the United States. They're outlawing wholesaling. The continuing education requirements are increasing. The demand for service is increasing. It's just going to keep happening. You'll see agents, you're going to see teams continue to get bigger. You're going to see the brokerage models continue to shift and adapt to that. Because what's funny, as a brokerage owner, large teams, they don't make a bunch of money. You would make more money on individual agents.
Right.
Because, you know, individual agents will pay a larger cap per individual. So you're seeing the brokerage model shift. All of real estate is shifting. I don't think, though, that started with NAR. I think, or the NAR settlement, I think that actually started back as we were coming out of the great financial crisis. It started then as the world started to change because of big data. And I actually think this is a function of tech, big data, apps, and these platforms and CRMs and how everything integrates. We can do more. Back in the day, when you went to do a loan, did you dig into your CRM and were able to check a million things and figure out a ton about that client, or was it all just written on paper somewhere?
Usually a lot of paper.
His Palm Pilot.
Yeah.
I did have a Palm Pilot.
I know.
But
So did I.
so now there are CRMs that have AI plugins,
Totally.
that have web access, that if Jeff's in my CRM, it'll tell me a summary of his conversations and possibly even go hit his social profiles. It means I can service this client at such a higher level, but because I can, he now also expects it, which means the agent has to do more, which means the loan officer has to do more. Well, in order to do more, they've got to band together because it's requiring more knowledge, like you were saying, and more specialization.
Yeah. Interesting.
Yeah, teams are a good thing. You just got to have the right people on the right seat of the bus.
Yeah, well, I think every business is like that. But so, sounds interesting. Sounds like it's going there. Maybe one other, can I go one other question?
Yeah.
One more question.
We always got time for you, bro.
Yeah. Well, and we're going to do another episode after this too. So we're going to wrap this one, and then we got a special episode coming up next. But so stay tuned to next week for that. But my last question is about the other verticals.
Yeah.
That surround the real estate transaction. So I see a lot of real estate companies and agents looking at title, looking at escrow, looking at mortgage. Obviously, I'm in mortgage, so I feel that one a lot. Looking at mortgage, looking at insurance, looking at other verticals. Let's just focus on the mortgage vertical for now, because I think that they're trying to get a little piece of every ancillary service that surrounds the real estate transaction, which is fine, but in the mortgage space, I'm just curious what you're seeing now as far as, look, there's always been MSAs and ASAs. There's always been desk rentals. But now I'm seeing, and am doing some of these things myself, where you have dual licensing, and partnering with a mortgage company. We're looking at owners of real estate companies being branch managers of a mortgage branch to be able to earn there. Obviously, joint ventures are still a thing, but difficult with low volumes because it's hard to be a joint venture in a non-profitable thing. So no one's really wanting to do that, but they're there, right? So you get some joint ventures. So I'm just curious, and then some real estate companies opening their own mortgage services altogether. So I'm just curious, your guys' take really quick before we wrap this up. Like, what do you see happening now? What do you see happening in the future? What's your thought on this, as margins shrink, which, hey, just little known secret to all you real estate agents out there, margins are shrinking over here too, right?
Yes,
so margins are shrinking in mortgage, but as margins shrink on the real estate side, partly because, the growth of the teams, less people capping, all these things, I get it. But they want to find other places for revenue. How do you think that, what are you seeing there? What are the trends there? What are your thoughts, if you have any, on that in particular? Jeff, you want to go first?
Well, I think if someone should do it, they should do it with you.
I like that one. But we don't need to talk after this. I got an idea for you.
Personally, what you focus on expands. And in the past, I've attempted to do that, have my wife get involved. And it was very complex and 1, 2, 3 too many for me. And I'm like, okay, where I see opportunity is just buying more real estate because my investments actually make more money than my real estate company. But what you're doing, I see a lot of people successfully doing partnering with lenders, title, escrow, and all that stuff. Anton's into that stuff for sure.
Everyone has the black mirror in their pocket. And what we've come to expect is services bundled.
Right.
And packaged together. One-stop shop. And I think that mental change in the consumer is actually what's forcing this even more than the chase of margin. Now, businesses will always chase margin, but I think the consumer has started pivoting that way. So the reasons we snuck into other verticals, property management, construction, escrow, insurance, blah, blah, is the customer would just, hey, who should I get insurance from? Hey, where should I go for escrow? Where do I get my title? And they would literally say, can I just drive to your office and do everything there? So I think it's not a margin chase, it's a shift in consumer behavior. Because we've come to expect a certain level of convenience. We don't want to cook. You want to press the button and have Uber Eats deliver it to you. You don't want to go shopping. You want to go on Amazon and hit the button and have it delivered. Well, they're looking for that same thing in the real estate transaction. They want the everything app where they're going to be able to do everything inside of that or go and have one-stop shopping. That's just my feeling. We're not there yet, but I think you're going to see more consolidation over the long run. And then especially with the new administration pushing tech, pushing AI, pushing blockchain. Like blockchain could fundamentally alter the title business, just for example.
Sure.
I think you're going to continue to see more consolidation. So I'm going to flip it around. I'm not going to say it's a want. I'm going to say it's a have to for businesses to survive and thrive in 2025.
Yeah. Well, I think it's more about margin than you're leading on, but
Sure.
but hey, fair enough. Because I've talked to people about it. Like, we got to find other sources of revenue. I do think that it's driven potentially by the consumer. So it's a good point, but I also think that it's driven because we're doing the same thing to some degree.
But I'm also a salesman, so I'm always selling.
I get it. But I think about the services that we provide. We have a concierge service, that helps people with the moving process. We do have an insurance company now, that we're offering insurance. And as I think about it, and then there's other companies that do this on like Rocket Mortgage. I mean, providing full financial services is kind of the goal that they're going. Point being is that banks have done this forever, where they know that if they have, multiple different relationships with that, if they have their car loan, their mortgage, their checking account, their savings account, their business account, this person's not going anywhere. So I think there's another aspect of stickiness that gets created. So I don't know that it's the borrower saying, oh, I need all these services together. But man, if I could get everything in one spot, I'm less likely to go talk to my insurance agent who then might refer me to a different real estate agent or who might actually do real estate themselves. I mean, or whatever the case may be. So there's the stickiness factor.
I didn't think about that. That's a huge part of it too, because so many loan officers and real estate brokers survive on referrals. So that stickiness it's a service and it keeps them in your ecosystem. That's a phenomenal point.
I think it's going to challenge relationships though within the industry.
Sure.
It starts being a conflict if we offer insurance and all the real estate companies we work with offer insurance, and then they might go, if I'm a managing broker and owner like you, but like, do we want to work with that mortgage company who's then going to try to take, our insurance business? So I think it's something everyone's got to be careful about as you look at these other things. Is yes, provided if people need it, but how much are you pushing it? Are you requiring it? There's a lot of nuance here that comes into play, but it'll be interesting to see how it evolves because everyone, look, we have all these services, and if everyone thinks they're the center of the spokes, right? Meaning if every person who offers an ancillary service thinks that they need to build a real estate company around them, a mortgage company around them, a title company, and then the title company thinks they need to have all, it's like, hello, at what point do we, how do we work together? Now we're all in silos, trying to compete for that same customer. And, I think the sharing of services has worked well for many decades. So,
and I think that's going to continue too. So the part also that we're discounting is, I think we're filtering it through our lens, and our lens is, a different percent of the total real estate or lender population. I think the average professional in those industries wants to just do transactions.
Totally. I agree with that.
And we're thinking about it more like entrepreneurs, like business owners, like people who, want to scale something. Most people just want to do transactions. They want to hang out with their kids. They want to go on vacation. They want to buy a property and be healthy.
Well, fair enough. And I agree with that. I would say most people that watch his podcast fall into that category, but they see it happening. And then they're like, why is everybody trying to get into insurance? Why is everybody trying to get into mortgage? I just lost my best real estate office because they brought in a branch of ABC Mortgage, that they partnered up with. So that's why I bring it up. You're right. I mean, we all own, or manage, large, businesses. And so we do think that way. But everyone's impacted by it, especially on the mortgage side. 100%. On the mortgage side, if you have not been hit up by a real estate company, or at least told by the real estate company that you closely work with, that how is it that we're going to have a partnership financially in order to keep this relationship moving forward? Then I don't know that you're living right now. You're not talking to enough real estate agents, because it's happening all the time. And
that also goes to show you how tight the margins are.
It's a little bit like racketeering.
But that also, I think, goes to show you how tight the margins are right now on the real estate side. Because I own two, and then with Ben, I get to see all of the, so I get to see like 1,700 agents, in a bunch of different brokerages. It's tight.
Yeah.
I mean, it's like, beyond tight. So everyone's hunting for margin, because they're how do I keep the doors open, keep everyone happy, keep everything moving? Right. And but we flip it around.
More marketing.
The marketing problem.
But, like, if you flip it around and you think, what if the 10-year is dropping and transactions were already showing up in January, and this is go season? Ignore the noise, boys and girls. Put your head down, work, market, make phone calls, do the open house, whatever. I think it's go time.
Yeah.
And I think a lot of this other stuff is just like, this is some noise. Like, just let's go.
I agree. We're going to end on that note, because I couldn't have said it better. Well, thank you guys for taking the time to watch this episode. You guys, Jeff, thanks for swinging in and crashing the party. It was good to have you. As I was teasing earlier, we're gonna take a break, and then we're gonna come back and shoot another episode. It's gonna air the week after this one, I believe, but it's not gonna be about real estate. We're gonna talk a little bit about health and wellness and peak mental state. I want to talk a little bit about, how it is that these guys have not only transformed themselves, their bodies, are helping many people transform their mental health, their bodies physically, their diets, their energy, their vitality. And it's going to be a really cool conversation. So check that out. But until then, thank you guys. If you aren't subscribed, you're crazy, but you should subscribe to the podcast. And just remember that a new episode drops every single Friday at 10 a.m. Pacific time. Thank you. Take care.